Hello everyone, welcome back to lesson 2, and today we'll be going over the fixed range volume profile. Okay, so we think of the market as some sort of shop. Some prices are very popular, where lots of buyers and sellers agree on value, and other prices are less popular, where hardly any trading happens. Okay, so the volume profile shows you exactly where most of the trading took place during a selected period. So the most important levels of the volume profile would be the point of control. The point of control is the price where most of the volume was traded. So basically it's the market's favorite price during that period. So if we think of it as the price where buyers and sellers were most comfortable with doing business. And because so much trading happened there, price is often attracted back to it's like some sort of magnet. So therefore, when price reaches the point of control, we tend to see a reaction because it's an important area of agreement between buyers and sellers. Okay, then we have the value area high over here. The value area high is the upper boundary of fair value, so it marks the highest price that is still considered fair value by at least most of the market's participants. So the value area low is the lower boundary of the value area, so it marks the lowest price that is still considered fair value. Okay, so the area or the space between the value area low and the value area high contains approximately 70% of all traded volume during that selected period. So what we can agree with is that this is where the market spent most of its time and conducted most of its trades. So if we simplify this between the value area low and the value area high, it's the market's fair value. Above the value area high is potentially expensive prices, and below the value area low is potentially cheap prices. So price behaves around these levels differently. When price is inside the value area, in here, the market is generally more balanced. So you'll often see choppy price action, back and forth movement, rotation between the value area high, point of control, value area low, and those sort of things. But when price moves outside the value area, the markets may become imbalanced. So, for example, above the value area high, buyers are willing to pay above fair value, and below the value area low, sellers are willing to sell below the fair value. So this can now lead to stronger directional moves. And simple rules to remember is that the area between the value area low and value area high define the market's fair value zone. The point of control is the market's most accepted prices. When price is inside the value area, we can expect balance and choppy PA. When it leaves the value area, we expect potential expansions or reversals back into the value area when the market is overbought or oversold. And I will give examples in my last lessons when we look at entry models. But this is why I have gone over the point of control so much, because it's going to be a key target within our trading. So I will also explain in the last lesson, I will also explain where I place the volume profile, and I'll explain my settings on it because it has many different settings. So I'll see you in the next one.